All right, it's another week, which means it's another WTF, the show where we rant, we rave, and we will argue. We've got a lot of news articles going on, but let's just start off by talking about the news. Is the news real? What news gets put out? Who is funding the news stations? That's going to be an interesting topic because we got, yes, the data. We got the data on who is spending money with these news media, these news stations, these media stations. And it's very interesting when you see stuff on social media saying that the SEC has approved the Bitcoin ETF. It wasn't even real. And then the SEC comes out and says the SEC's Twitter or X account was hacked. Who should we believe? Is it the SEC going to investigate the SEC? I mean, what is going on in the news? We're going to cover these topics. We're going to cover the Boeing 737 MAX and the door that just flew off. Thank God nobody was sitting there. We're going to talk a little bit about the Bank Term Funding Program, the WTF. And we're going to talk about a lot of other things right after this. All right, we are back, joined here by my partner in crime, Mr. Nagy out in Florida, who's dealing with some crazy weather going on, which we're going to actually talk about the weather today. So, Steve and I always thought, like this was going to be a show about finances and money, but we're going to start reporting the weather because there's some shit that just doesn't make a whole lot of sense. But with that being said, what's going on down in Florida? What kind of storms you guys got going on today?
Yeah, I mean, good morning, and it's good to be here. The storms are all passed over last night. I know East Coast got a lot of wild weather yesterday, though. I mean, I saw video coming out of Georgia, North Carolina, the border up there, and they got one within a few hours. They got an entire month's worth of rain. Part of this storm, tornadoes being formed up all over the place. Saw some wild videos. By the time it got over to my coast, it was all hyped up and tornado warnings, and we ended up actually getting really nothing. But it's blowing through these weird, I don't know, making me feel just like my head wants to explode. Like this weird stuff is in the air, and it's not just me. It's a lot of people talking about this. So, it's a little fun to kind of think about that conspiracy, a little crazy at the same time. But what is going on out there with the weather? Hey, what are you guys doing, and where are you?
Anyone else watching this been kind of questioning the weather a little bit and why we keep getting sick? I literally have been on and off sick for the better part of 4 months now. I feel like I'm getting pneumonia now. It's just like, but we're talking about weather, and we've got a major storm that just hit Buffalo yesterday. We had 70-mile-an-hour winds. I was so sad. Across the street from my house, we used to have all these beautiful pine trees, and last year during the blizzard, but most of them blew down, and last night another one blew down. So we've only got one tiny little lone pine tree left across the street from us. But it's kind of funny, when these storms hit, these crazy storms. And yeah, in Buffalo, the weather's been nutty. I mean, our office has got more leaks in the ceiling than I've ever seen. Thank God we're moving to another location, but that only happens when wind is going sideways. But it is kind of funny how all these sicknesses, and I've been following it. This is complete conspiracy theory stuff, but I was, following some things on social media, not that those are ever really truthful, but they were talking about how everybody's got this same sickness. How many of you have been sick recently? And, it starts with a cough, a sore throat, a little bit of tiredness, and then you're coughing a lot, and then it feels like it goes into your lungs a little bit. Maybe it's a sinus infection. It's like a combination of the flu, RSV, and just a common cold, but it's not COVID, because when you check for COVID, nope, you're completely negative. So what is this new thing? Is it related to some of these weather patterns? And heck, I've even seen that they're putting stuff in the water. It's all conspiracy theory. But when you start connecting the dots, you start asking yourself, is it really a conspiracy theory? But I know this show is supposed to be about money, but you can't make money when you're sick at home. If your trading hours for dollars. So now, shameless plug, folks, everybody on TikTok, Instagram, YouTube, Facebook, thanks for joining us for What the F Happened. I'd love to invite you this afternoon at 1 p.m. Eastern to our live webinar that we do every single week. We always have several hundred people that join us. This week is going to be epic because it's the second one of 2024. We've got some amazing stuff we're going to be talking about, and we are not going to be talking about the weather on wealth or on Wealth Webinar. We're going to be talking about your money, and how to crush it in 2024. But with that being said, Stephen, what should we talk about the SEC and the SEC literally investigating the SEC, who's investigating the SEC? I'm kind of making that up a little bit, but there was this huge rave the last few days. Some of you maybe don't even know about this, but there was on social media, on Twitter, it started, but then it went over to Instagram, and I saw it on TikTok, I saw it on Facebook, and I even saw people make videos on YouTube about this, trying to get a jump. It was all fake. Somebody hacked the SEC's page on Twitter and posted that the SEC had approved the Bitcoin ETF, which obviously anyone in crypto has really been kind of on their on pins and needles waiting for this day where the ETF, which is primarily Bitcoin, gets approved, because that kind of legitimizes crypto trading and crypto investing. Not that it isn't legitimized by now, but it was all fake. The SEC has not approved the Bitcoin ETF, but it's the SEC's site that got hacked, and a report on CNBC says the SEC's account compromise was not due to any breach of X's systems. So that means the SEC got hacked. Stephen, you want to talk about this a little bit? Because I think that's an interesting one.
Yeah, I mean, they basically made the meme come to real life. The SEC saying the SEC did it, the SEC saying the SEC did it. So it's always fun to watch a meme come to real life. But yeah, I mean, at the end of the day, the SEC is supposed to be the ones that regulate, things like this that happen, and to have the regulatory agency that is in charge of everything not even be able to secure their own social media site just goes to show you who's running things over there. And we'll leave it at that. It looks like it ended up being a hacker that took over someone's phone, and they didn't have two-factors authentication turned on. So it's a good lesson to be learned by everybody. If you do have the ability, turn on the two-factor authentication and use those different ways that they allow you to get those codes generated, and it can protect you. But even the SEC can fall victim to hackers these days. I mean, they're pretty powerful, so be careful out there.
But it certainly helped Bitcoin a little bit, because even though it was false news, Bitcoin shot up, which is a very important lesson. Not only can the SEC learn about better training for their employees on their phones and these two-step verifications, but also we can learn not to trade or invest on FOMO, on a fear of missing out, or on completely false information. We need to get back to using logic, pure, unadulterated logic. And not only logic, just study Warren Buffett, his trading is based on fundamentals. I haven't talked to any investors in a long time that actually know anything about fundamentals. They're like, oh, I thought this was going to be good. NVIDIA, it's in the news all the time. Looks like the company's a great company. I bought a bunch of it. People are investing in things that they have no idea what those companies do. And even worse, in today's world, you got 401ks, and 401ks are mostly made up of mutual funds. One mutual fund could have 100 or even more than 100 different stocks. So when you ask somebody, what are you investing in your 401k? They say, oh, I have no idea. It's one of those freedom funds, which is even worse, because a freedom fund or a retirement target date fund is a fund of funds. So it's not just one fund, it's several funds then lumped into this date, this magical date that they're going to manage it for you and take it to get more conservative the closer you get to the retirement date. And drum roll, they put a higher fee, a management fee on those freedom funds or those target date funds. But do you even know what you're investing in? Listen, if you go back to the laws of wealth, and there's lots of them, but if you just go back and you look at them, one of them is invest in things that you know, that you like, and that you understand. How and why do so many people invest in things that they don't even know, like, and understand? And in Bitcoin being one of them. people acting on completely false information, a hack of SEC's Twitter site. And hey, listen, like, I hope Bitcoin keeps going north, but let's not forget Bitcoin is very correlated to the stock market, and the stock market has not been doing all so good this week. So I think Bitcoin's in for a wild ride the next few days. What do you think, Stephen?
Yeah, I mean, and it brings up the broader point of, what is driving the markets? I mean, that's kind of why we started the show in the first place. We don't have advertisers. We don't have people that pay us to, promote certain angles or stories or anything like that. We just decided one day, hey, like, the news is kind of bullshit. Let's provide an alternative viewpoint and let's try and dig into what's actually being done. And, Elon shared a post on X yesterday, and it said Bill Gates donated $319 million to major media organizations over the last few years.
Well, hold on. He just donated it? Like, just said, hey, here's a bunch of money. Like, don't worry about putting any of my ads out. We're not going to advertise for Microsoft. He just donated the money to the media sources.
Yeah, I mean, and then you got good old George Soros, very outstanding citizen, funded over $130 million to 253 different media organizations over the last 4 years. And let's not forget about Big Pharma. I mean, how many news channels do you put on in the segment is brought to you by Pfizer, and make sure you get vaccinated and wear the masks and all this stuff. And so Big Pharma spends literally billions of dollars a year, every single year, in media advertisements. And then you have Jeff Bezos, who's one of the most progressive Democrats out there right now, who literally owns and controls the entire Washington Post, which is one of the oldest news publications in the history of the world. And so, what are these angles that we're seeing when we hear these stories, and why? So, it just brings up that broader topic. So when you see something like the SEC making a post that was hacked, it drives the markets. What else is driving these markets right now in the real world?
I think there's one lesson in there, Stephen, though, that you failed to mention is, when you talk about all those people from Bill Gates to Soros to Bezos, the one thing I can say about them making those investments into media is at least they're investing in things that they know, like, and understand. But because they know, like, and understand it, they also know how to know and manipulate it. They also know whose, like, pocket to fill so that they get what they want. I mean, listen, the narrative, when you think about countries like Russia, and you think about, the communism, everything. So anything that you see in Russia, and I have a bunch of friends that are from Russia, and this is firsthand, like, everything on there is 100% controlled by the government. So anything that's on their news is literally going to always make the government look good. It's never going to be the real news. And they talk about that. And that's why countries like China try to control social media, because they control the news in China as well. And they're trying to control the social media side of it, because people are getting the truth. And they're like, wait a second, that doesn't jive with what I just heard on the news. But, like, as much as I want to sit here and say in the United States of America, like, oh, we don't do that. Bullshit. Yes, we do. The news, half of it isn't even real, which is kind of funny, because what this show is all about is literally reporting the news. But I don't know if you've all noticed, any of you that have been following this for a while, we very rarely even look at the news. I mean, if we run out of stuff to talk about or rant about, like, we go to it. But I get a lot of my information from white papers and economic reports and books that I read that are cited and fact-checked. I don't even think the media has any type of fact checking. I think they can just blatantly lie and be like, oh, sorry, we'll put a retraction in that nobody reads anyway, because it's in the small print on the 15th page back, and nobody even reads it. But, Stephen, where should we go from here? Yeah, and this one's interesting. TY over here on TikTok says, is our news really free? That's an interesting one. No, it is not. We've been doing this 30-day challenge of listening to Earl Nightingale's The Strangest Secret in the World. And he talks about, the things in life that are free are things that we don't even value, but the things we pay for are the things we value, which are usually cheap things that can easily be replaced. But the things we basically get for free, our dreams, our love, the people around us, God, all these things that we get for free, we don't put value on. At least some don't. And there's a lot to be said about that. So what is it that you value? I'll open with that. Yeah. Gavin said, coming in from YouTube, said apparently it wiped out all those who were leveraging Bitcoin shorts and longs. Yeah, you see, there's another law of wealth, not just protect your wealth by investing in things you know, like, and understand, but the next law, the fourth law, is be realistic and never get greedy. So right there, Gavin, those people got greedy and they got wiped out. You can't beat a law. I'm sorry. I mean, the law of gravity, go to the top of your building and jump. Can you fly? Can you beat it? No, you're going to hit the ground. And hopefully your building is not very high. So like all these laws are unchangeable. You cannot bend a law. So it's easier just to follow the laws. And I don't mean the laws of don't speed, no jaywalking. I'm talking about universal laws. What other one do we want to hit, Stephen? There's a lot of news today.
I mean, the Boeing story is pretty interesting. So, we fly a lot around the country, and it's pretty wild to think about. But if you missed the story last week, a Boeing, Alaskan Airlines Boeing 737 MAX took off from Portland, Oregon, and after a few minutes into the flight, literally a panel that ended up being an exit door that was hidden behind a panel, the exit door just blew out of the airplane, and there's just literally a massive hole in the plane. Now, luckily, I imagine, it was only a few minutes after takeoff, so they weren't super high. But I mean, I imagine if this would have happened at 50,000 feet,
wouldn't have been good, man.
It would have been deadly, right? I mean,
I would have to believe those seats would have got sucked out. Now, they did say nobody was sitting in those seats, which I find weird. I haven't been on a plane recently that hasn't been completely full. So just those seats were empty. I don't know. It's
really weird. They said they're like the only, there's 5 empty seats on the entire plane. It happened to be the ones right next to that door.
I mean, that could just be God right there protecting everybody. But yeah, if they were higher, at cruising altitude, 30, 40,000 feet, I would have to guess those seats and many others would have just been sucked right out of the plane. I watched some of the footage of it. It's freaky. I mean, being somebody that flies a lot like you do, Stephen, just thinking about that, like you're sitting in a seat and then all of a sudden, there's just a hole in the plane. Like that would be freakish. And then the plane, in one of the photos, it's banking, and you can literally just looking down at the ground through a hole in the plane. I mean, I'm sorry, that doesn't make you feel super good. Not at all.
Not at all. And then a guy named Bob actually found the door in his backyard. So imagine that.
Oh, all right, Bob.
You go out
Bob should try to sell that back to Boeing and be like, hey, you put this in my lawn. Can you pay for the damage it created to my flower garden? I'm just kidding.
Now, the broader markets, it's not good for Boeing. They grounded all the 737 MAXs across the country until they can check them out and make sure they're safe. But if you think back several years, in 2019, Boeing had major issues with the same jet, with the Boeing 737 MAX. And back then, it's kind of funny. Actually, Donald Trump came out in 2019 and was talking about the issues that Boeing was having. So kind of cool to see something that Trump was talking about 4 years ago.
Oh yeah, the fatal crash.
Pretty much right about, but he told Boeing to fix and rebrand the 737 MAX jet after those the fatal crashes that it had back in 2019. And he came out in a tweet at the time and said, "What do I know about branding? Maybe nothing, but I did become president. But if I were Boeing, I would fix the Boeing 737 MAX, add some additional great features, and rebrand the plane with a new name. No product has suffered like this one. But again, what the hell do I know?" So Trump being Trump back then. But
I mean, there's some truth to that. Like, think about it. Like, how many of you right now want to get on a plane and then you pull that little thing from the seat in front of you and it says 737 MAX? How good you going to feel about that, right? And that's not going to go away. There was fatal crashes. Now the door blew off. Like, oh, we just had a couple loose bolts. What else is loose on this thing? There's a screw loose here and there. Like, I don't want to fly on a 737 MAX. I'm just saying.
Well, he also went on to talk about how, air travel is becoming far too complex. He said pilots are no longer needed, but rather computer scientists from MIT. I see it all the time in many products, always seeking to go one unnecessary step further when often old and simple is far better. Airplanes are not laundry detergent, chewing gum or aspirin. You don't and can't just rebrand them is what the pushback was. But I mean, the guy's got some points there. And if you look at people like Elon Musk, I read his biography by Walter Isaacson a few months ago. And, one of the things that made Elon so successful with these companies like Tesla and SpaceX is he did the opposite. Is he, instead of trying to add all these unnecessary little steps and benefits and things like that, he says, how much can we take away from the product but still have it function the way it's supposed to? So he literally does the opposite of what a lot of these big major companies do, and it shows in the profitability, and it shows how these companies perform when you look at SpaceX and what SpaceX has been able to achieve. I mean, I live here in South Florida. Multiple times a week, I'm looking out my backyard watching these rockets take off one after another from Cape Canaveral that SpaceX is shooting up there. And it's because what he's been able to do with design and engineering and not adding all this crap into these things. And then you look at some of these other companies, they were supposed to send a rocket through a NASA program. They were supposed to send a rocket up to the moon. It was going to be the first moon landing we've had since 1970, whatever it was. And that launch was scrapped because these other companies can't figure it out. So a lot of lessons to be learned there, in my opinion, Chris.
Tons of lessons. I mean, there's so much news. I don't even know where to go next, but let's start with Jamie Dimon over at JP Morgan. So, for any of you that have been following last year's profitability, JP Morgan did pretty well. They raked in, I think, $49 billion in annual profits. Not too bad. But they are in a little bit of hot water right now, actually a little bit of trouble. If you really look at it, they got some major headwinds coming at them. And it's not just them. I'm going to talk a lot about banks, which is why I wanted to kind of start with Jamie Dimon and JP Morgan here. But net annual income is expected to surpass Bank of America by more than $20 billion, and then likely to double. So it's just going on talking about how JP Morgan was breaking away from the pack, but now all those profits that they made in prior years might be the headwinds that they face in future years because they took on a lot of risk. So a lot of times, this is also investing in things like and understand. A lot of times when you see a company making huge profits, like I'll even pick on NVIDIA or any of them where they're just like crushing it, but what are they doing to crush it? And are they taking unnecessary risks in the future that will jeopardize in the future? Now, I mean, you can look at politics for that one. I mean, because it's just, every 4 years, you're just restarting the clock. But also for presidents and CEOs of companies, like a lot of them just step down, take their golden parachute, and they're off, with their billions of dollars that they've made. But I think you're going to see a lot of this. We reported, and I did a YouTube video all about 700 banks in the U.S. that right now are outside of the FDIC guidance. So the FDIC sets guidance for banks in terms of risk and different levels and all the checks and balances that they have. And there's 700 banks right now outside of the guidance set by the FDIC as it comes and pertains to commercial mortgages. Now, I've also reported on this about the commercial loan debt, right? The debt cliff is what they call it, where a lot of these commercial loans are maturing in the next couple of years. Some of them are starting now because a lot of them, back when rates were so low, banks would issue a loan or a commercial mortgage with a 5 or a 7 year, sometimes a 10-year lock, which means they locked in 5 or 4% loans, but those are all going to sunset or they're all going to mature. And now these loans need to be reset. I've had this happen several times in our real estate portfolio. Now, luckily, because of the infinite banking concept and what I teach every single day with Stephen and our entire team, I've been buying the mortgages out. So as the mortgages mature on my portfolio, I take money from my policies, I pay off the bank, and then I pay my policies back the same amount I was paying the bank. But a lot of people aren't there. A lot of companies aren't there. So when these loans reset, I want you to think about this. A company, and I'm going to hit a little bit on reporting of future outlooks, because most companies, almost all companies right now, are reporting slower future growth and outlooks. So what that means is they're anticipating in the next few years being slower than they are in the prior couple of years. So now companies are going to slow down, which is going to affect their profitability. They're going to face some headwinds. And all of a sudden now their debt structure, whatever their debts are going to go from maybe 3% to 7 or 8%. What's that going to mean for these companies? Now, all of a sudden, their cost load just went up huge. And a lot of these companies are highly leveraged. So where does this all fall into JP Morgan? And what was the moral of that story? JP Morgan holds a ton of this stuff, a ton of these commercial loans. And they know that they have trouble brewing. The whole article covers that. I'm not going to read it, but that's essentially why they're sitting there saying that JP Morgan and a lot of other banks are yes, reporting better, than expected earnings and crazy profits, but the future's not looking so bright and sunny for them. I don't know if any of you have ever really been following any of this, but Stephen, what do you think about that?
Yeah, no, I mean, I don't have anything to add there. It's well said.
But there's a lot of companies, recently that have been, and I'm trying to find the article. There was an article, I think it was Yahoo News, that I saw a little bit ago, how a lot of companies are reporting, and they're all coming in with lower than expected future outlooks. So I find it so hard to grapple or wrap my head around all the news. Remember, we started this show talking about fake news and who controls the media, but all the news saying that we're going to soft land and everything's going to be good. And 2024 is going to be record profits and this. And I constantly got to go back to my logic mind. And I got to ask, how? What could push the markets higher? I don't even know why the markets are as high as they are. It's complete and utter speculation. Literally, if any of you remember, not long ago, Jerome Powell came on and said he didn't say they were going to drop rates, but he opened the door for potentially 3 rate decreases, okay, in 2024. I'll tell you right now, 3 rate decreases in 2024 might very well happen, but it's not going to be because things are so good. It's going to be because things are so bad. But they didn't say that. Secondarily, the market then goes out and rallies and builds in 6 rate decreases. They literally built in 6. Is that a little bit of an overshoot? That would be like, you're trying to go to the moon, but then all of a sudden your rocket just overshoots the moon and you're headed to Mars. Like, whoop, hey guys, we got to turn this thing around. We overshot. Like that's what's going on out there. I can't make any logical sense of why the markets are testing new highs and pushing new highs. There is no fundamental reason this could be happening, period. None. If anyone can prove me wrong or give me some light on this subject, I'd love to hear it. We had a guy on last week, or no, 2 weeks ago, because we got shut down, who was sitting there saying, invest in this stock and it's no risk. And I'm like, there's risk in every stock. That's why it's called an investment. Like it's not guaranteed. And he was saying guaranteed. And I think he reported me to TikTok and got me shut down, but he doesn't look to be here today. The Sure label is upside down. Yeah, I know, because it's flipped so that I can see you guys. But great observation. Like Todd Lewis on TikTok just wanted to point out to everybody that the Sure label on my mic is backwards because I've got my iPad flipped. So yeah, but hey, test your mind, see if you can read it. But he could, because he knew it was Sure.
Yeah, I mean, so investors this week, I mean, inflation data comes out tomorrow, as well as different significant earnings reports coming out later this week. So that's kind of what the markets are keeping an eye on right now. Stocks closed mostly lower Tuesday after Monday jolt higher. Federal Reserve still remained the biggest plot theme Tuesday. The market is pricing in a 59% chance that the Federal Reserve will start lowering interest rates at its March policy meeting, according to the CME FedWatch tool. That's down from a nearly 70% chance last week. So they're starting to think there's a less of a chance of rates being lowered starting in March. They went on to say we're a long way from saying March is a certainty, and I think the market is coming to terms with that.
This is pretty crazy. This is in Yahoo Finance. You know how we were just talking about, like NVIDIA. I just threw it out there because most people know what it is. There's a report, and it's this guy, Wall Street legend, who called Priceline collapse in 2012. The 2020 crash and also the 2022 bear market issues a dire warning for America's favorite AI stocks, and he's warning about NVIDIA. So there's a whole article here. If you're holding NVIDIA or FANG right now, FANG are, the Facebook, Apple, Amazon, Netflix, Google. Now it's time to prepare for a massive shift. In other words, he's saying the same thing we've been saying for the better part of the year. Take your gains off the table. The way you make money, folks, it's so simple. The way you make money in investing is you buy low. Okay, you don't buy high, because here's how it works. Here's how you make money. I'll make all of you very wealthy. Buy low and sell high, and you won't lose money. Now, here's what most people are doing, including all those people that jumped into Bitcoin. They are buying high. And then what are they going to do? Sell low. And then what is that going to result in? Losing money. This is what emotional-based investing in emotional-based FOMO, that's what it does to you. You're sure to lose money. So if you guys need a tax write-off, okay, great. Buy as much stock as you can right now if you need a great write-off. But if you're a little conservative, you're a little worried about losing money, if you're thinking, oh my God, we're doing so well, should we take some off the table? Yes. What do you have to lose for taking money off the table? Sitting on the sidelines, what's it look like? There was another article. It was one of the bank, or I don't know. I'm not going to look for it, but it was just in Yahoo Finance. And they were saying now is a good time to sit in money markets. Who knew? You can make almost 5% sitting in money markets. Why is that not a good return now? Why? Because last year made 24% because of manipulation, speculation, and massive money printing and lies. Like, you think that's going to continue to keep repeating itself? You're nuts. Sorry to go off on a rant, but like I just did a YouTube video, and literally what I did is I studied the period of the Roaring 20s, and specifically 1926 to 1929. And what I did is I looked at all these articles and all these videos of what did it look like during that period of time. Does anyone know what it looked like during right before the Great Depression hit? Anyone know? It looked just like it does today. People were partying, and they were literally, the war had just got done. They just got done with a major influenza, which wiped out a lot of people. So they had death on their mind. They didn't know how long they were going to live. So they partied like it was 1999 because they didn't know if they were going to be alive the next day. But that resulted in big credit card, or they didn't have credit cards, but they had credit. But back then, if you look at it, that was during that period where washing machines and all these appliances were coming out. Families didn't have the money to buy these, but the companies that made these financed them. Do you know that Stephen, did you know that 90% of almost all the goods in people's homes during that period of time, during the Roaring 20s, was financed? I didn't know that until I read this article. 90%. And when the Great Depression hit, it wiped all these people out because they were leveraged. And not only that, that's when margin was being used heavily to buy stock. People were investing in things they did not know, like, and understand. They were just, this stock's going to the moon. The old Kennedy story of the shoe shine boy, like they were all just investing in stocks and making money. And then when the hammer dropped, they all got wiped out. Unemployment skyrocketed, which I have an interesting article that actually, let's talk banks, Stephen. Sorry, I'm on a rant here, but let's talk about banks. Nobody forgot that just a year ago, a whole bunch of banks went defunct, right? You guys all remember that? And do you know why? I did a great video on this, but do you know why the banks went defunct? So banks, with their tier 1 capital, their money that they have to have guarantees on, it's their safe money. It's about 10% of what the bank brings in. So if you give the bank $100 today as a deposit, they need to keep roughly about 10% in reserves, called tier 1 capital, the most valuable dollars. So banks, for the longest time, the only place they could put their money is in government securities or government bonds because they're guaranteed by the full faith and credit of the U.S. government. But they also, during the 1980s, allowed life insurance, specifically a whole life type product called BOLI, to be used for tier 1 capital. And now banks are the number 1 purchasers of whole life or BOLI in the world, with the top 10 banks being over $1 trillion just in cash or in BOLI. So, but not getting there. Just a year ago, a bunch of banks went defunct. And I told you there's 700 banks right now that are outside the FDIC's guidance. So here's what they did last year. If you were paying attention, or you watched my video, and if you didn't, go back in my YouTube and watch it, shameless plug. But the Fed gave the banks this thing called Bank Term Funding Program, which it was a borrower's dream, a bank's dream, really, because what it allowed the banks to do. Now, the banks were underwater with their tier 1 assets, the treasury bonds, because as the Fed raised rates so fast, the treasury bond prices went low. Buying opportunity, buy low, buy low, buy low. But the banks bought high. They bought the treasury bonds when they were priced really high. And when the Fed raised rates, the price of the treasury bonds went down. So when they had a run on the banks like Republic and Silicon Valley, they just ran out of capital, and they were illiquid. So the Fed had to step in and do this. But then the Fed, realizing a lot of other banks were going to have this problem, they created this BTFP. And under the BTFP, banks can take out a 1-year loan. Now, keyword, 1 year. Stephen, look up Silicon Valley Bank's collapse and when they came out with BTFP. They gave 1-year loans against high quality collateral like treasury bonds, but they gave it to them at par, okay, at par value, $100. Okay, even if the bond is only priced at 80, they gave it to them at $100. So they're giving them loans on assets that don't support the loans. That's a no-no. So if any of you are private lenders, you never, ever, ever do that. But the Fed can't. So the banks then collateralize these loans with their 30-year U.S. treasuries that they bought over the past decade. And the bank was sitting in a loss position on these treasuries. But it's okay because the Fed just juiced them and gave them all the value of those bonds up front for 1 year at pretty much no fees. Okay, they didn't charge them any fees and pretty much almost zero interest. It was like 10 bips, 10 basis points, plus the overnight index swap. So it was the cheapest money you could ever get. You guys would all clamor to borrow money from the Fed at these rates. But these are 1 year loans. Okay. And what this article is talking about is because they're 1 year loans, these loans sunset, which means they mature in March. Now, let me just kind of give you some scale. So banks took advantage of this program in the early days, borrowing $120 billion. And then banks have tacked on another 20 billion since. What's another 20 billion since that point? So there's a little bit of debt there. And everything's going to mature or start to mature in March. So what happens when the banks can't pay these loans back to the Fed? Well, we all know the Fed could they could extend it, they could refinance it, they could do anything. But still, I'm trying to explain banks right now are on really rocky roads. They're not all that secure, hence JP Morgan and some of the other big ones. But banks, this is what scares me, and this is the key point I want you to take, and do not mimic the banks. We always say mimic the banks, but mimic the banks and how they make money lending and on spreads. But don't mimic the banks in this, because here's this a keynote I highlighted. The upshot is the Fed has taken more risk onto its balance sheet and eased monetary conditions in the process, easing banks. When banks aren't held accountable for managing deposit risks, okay, which is risk on your deposits, but then they're rewarded by maximizing that risk, it sets a bad precedence. So this whole article is talking about that. And then it goes on to say, remember, taxpayers and savers are always the ones that pay. I just thought that was a really interesting article because these are the things we don't see. Remember, I talked about the corporate or the commercial loans sunsetting, but this is also now banks borrowing money to keep themselves afloat because their treasury bonds were underwater. Now, Stephen, there's a hidden secret in there. The Fed opened the door, Powell opened the door for 3 rate decreases. When the Fed dropped rates or hinted that they could drop rates, treasury bond prices skyrocketed. Because when do treasury bond prices go up? When rates go down. You see what I'm saying, Stephen? So the Fed is the central bank. The Fed lent banks a bunch of money, billions of dollars. And if the Fed doesn't drop rates and the treasury bonds don't come up, their collateral is underwater. So do you see how this is all connected? I know I went on a bit of a rant there, but like, this is the shit that goes on behind the doors that nobody sees. And most people don't even care. Most people watching this on TikTok, Instagram, Facebook, and YouTube are probably like, none of this matters. None of this affects me. Yeah, it all affects you, actually, because it all lands the same place. What did it look like right before the Great Depression? Just like it looks today. Actually, today it looks a lot worse. What's coming in the future? Is it a soft landing? Is it a perfect market? Are we going to see another 24% in the markets this year? Well, if we do, it is solely based on manipulation. The bubble will get bigger. And when the bubble pops, which it will probably either right before the election or right after, because, hey, we're in for a really, I love how people like during football, especially this time of year, playoff season, people just all are in front of the TV. It's going to be the same thing for the election. That's going to be the party right there, Stephen. You talk about party like it's 1999. A couple months before that election, man, it's going to be party like it's 1999 because all bets off. Like shit's going to go down. And it's going to go down. And we're going to have a front row seat to watch this. But we got to decide what we actually do. And the one piece of advice I'd give everybody is focus on just the positives in your life. Don't get caught up in the negatives. Don't get driven to a narrative. I don't know. We live in a world of divide, but the divide is fully created because of the media. Anyway, that was a long-ass rant.
Put a bunch of political signs in your yard and fight with your neighbors and, stick together. But something about Silicon Valley Bank, I was just kind of looking over some stuff, something that a lot of people kind of forget about is, when you put money in a bank, you just automatically assume it's insured and the FDIC's got your back and all that. But they said that at the end there, over 94% of all deposits at Silicon Valley Bank were not insured by the FDIC. So over 94%, Chris, that's wild. It just makes you realize, like, are these banks really as secure as you think they are?
Yeah, it is. Nelson Camp on Instagram came in and he said, but history won't repeat itself this time. Funny how people forget that history always finds a way of reposting the same story. So I'm not quite sure the relevance of that second part, but Nelson saying that history won't repeat itself. Well, that'll be interesting. I can't predict the future, nor am I going to try to, but I don't know. The only thing we can go off of is what we've learned in the past. And it seems like a lot of the people at the top don't learn from the mistakes of the past like we do. Well, some of us do. All of you watching, you do. We learn from our mistakes and we try to get better, right? We try to take mistakes and failures in life and learn from them so that we don't do them again. But it doesn't seem like the Fed or banks do that. They just sort of they don't care what they made the mistakes because they got the printing press. But I don't know, Nelson. I mean, it's an interesting one. Will history repeat itself this time? We're about to find out. The question is do you want to sit on the sidelines and watch the show, or do you want to be in the mix if it does repeat itself and go that direction? Wait, he came in one more. He said, nah, bro, I was being sarcastic. You were talking about the Great Depression. It will happen all over again. Oh, I figured. I know Nelson, so I figured that's what he was saying. So he was sort of just kind of being silly about it. So he's saying, no, it's going to happen all over again. Amen to that. I truly think it will, but I can't predict the future. So I agree with you, Nelson. So thanks for agreeing with me on that. It was an interesting way to arrive at the same conclusion as shit's going down, folks. The Titanic, well, it's at the bottom of the ocean. And I think the economy and the stocks in the stock market are all going to probably do the same damn thing. But the good news is people like Wade Silversmith over here on TikTok just got his insurance license and wants to join our team. So some people understand that the sidelines, the safety of the insurance world might not be a bad place to land. So Wade, get a hold of Stephen and he can help you with that. Would you hold treasuries? Paul, I'm saying it wrong, 27 on that says, I have a lot of bonds and treasury bonds. I have a ton. I have well in excess of $100,000 in treasury bonds right now, just in my TD Ameritrade account. In Schwab, I have a little bit in my small amount of IRA money that I have there that I couldn't move to my self-directed. So do I have, or would I hold treasuries? You bet your damn ass. Matter of fact, I'm going to buy some more today. I'm going to buy some more treasuries today because why not? Why not? Buy them low. All right. What else should we hit on? I got another article here, but let's.
Yeah, go ahead. I mean, we could talk about the disaster we call the federal government right now.
Let's talk about the disaster because it's way more important than talking about get ready for 15% unemployment, the highest since the Great Depression. But yeah, I think your article is probably a lot better. I'm not kidding. It's right there.
No, it all leads to that, though. I mean, we talk about inflation. We talk about the cost of goods and just it's most people can't afford to live right now. They can't afford to buy a home for sure. Rents have gone so high up. The cost of going to the grocery store is just astronomical. I mean, and we continue just to see complete mayhem at the federal level. I mean, we have, the merchant, the shipping routes over in the Red Sea right now continue to be dominated by these Houthi terrorists. And it's just, why do we have, I mean, Chris, if you look at the United States budget and what's spent on defense, on the military in this country, it's astronomical, the amount of money. And then, just this week, it comes out that the Secretary of Defense, the guy that runs the show for the military, disappeared for almost a week. I guess he had some kind of surgery and had to go back in to the hospital, to the ICU. Nobody knew that he was gone. He didn't tell anybody that he was in the ICU. So nobody was running the freaking military for several days over the last week. So what is happening? We're in active war, essentially active wars with Ukraine and Russia going on, and Israel and the Middle East and everything that's happening in Gaza. And this guy just disappears. Why aren't we taking care of these Houthi terrorists that are just like these little ragtag boats that are completely disrupting. I mean, since November, the cost of shipping containers through the Red Sea has over doubled, which all of that leads to higher prices here in the US. Like, what is going on at the federal level? And you see all this happening. I mean, the southern border continues just to be wide open. The amount of immigrants and illegal immigrants and people being released in the US, the numbers are just unbelievable over the last 3 years, and it continues to be worse and worse. The Justice Department is suing the state of Texas over trying to do something.
Oh, dude, I find that hilarious.
They're shipping all these people up north. In New York, in the state of New York, they just shut down a high school with 2,000 students and are making them do virtual schooling because they have no place to
tell them why. Tell them why. That's the important part.
They're sticking them into this high school. They don't have anywhere else to put these people. So it's like, it's just a complete nightmare on every level. It's like, who's running the show? I thought the adults were in charge now when they elected this guy, Joe Biden, the dude.
It's just crazy when you start hearing about the government suing states because it's pure insanity. It really is. And Mary Parker on TikTok said it's all part of the plan. I agree with you, Mary. I completely agree with you on that one. It's all part of a plan. What plan? We don't know, and if any of you do know, please send us an email and let us know what the plan is so that we then can kind of report the truth. But I don't know. The thing about the truth is it hurts. And people don't want to get out of their comfort zone. We've lived in such good times for so long that people don't want the hard truth. They don't want the hard, facts, and they don't want the hard work that comes along with it. But all of you watching this show right now, and all of you that will join us at 1:00 this afternoon or 4:30 for Ask Me Anything, all of you are literally the 5%ers. And I always find this a very interesting thing because you want the truth. You wouldn't be here if you didn't. I mean, maybe you're here to argue with us, but nobody's even wanted to argue today, which is probably good because I'm sure TikTok will shut me down again. But there was an article here that I want to do where it talked about, like, what is wealthy? Like, what are the numbers that in America consider you to be wealthy? Let me find this article because it is pretty interesting. And it's not what you would think. Here we go. Are you rich? Here's what Americans think you need to be considered wealthy. This kind of caught me off guard. So you guys ready for these numbers? The top 2%. This is just the 2%ers. We're all, like, I always call us the 5%ers, right? But we're talking just the top 2%. The top 2% of Americans have a net worth of about $2.472 million, aligning closely with the surveyed perception of wealth. Now, also, when they count net worth, just realize it doesn't include your primary residence. So you are considered the 2%ers if you have 2.472 million or more in net worth. Okay, let's go down one more. The top 5%, the 5%ers, as I always call it. And I use the 5% because if you really study Social Security's statistics, out of 100 people, only 5 of them will be financially successful. Only 1 will be rich or wealthy, but 5 are financially successful. So I always say we're part of the 5%. This tier, the top 5%, has a net worth of around 1.03 million. And the top 10%, this will blow your mind. The top 10% in the United States of America, the greatest country on earth, the land of the free and the land of opportunity, top 10% wealth is approximately $854,900 net worth. I thought it would be way more than that. What would you think, Stephen?
Yeah. I mean,
I couldn't believe that.
Yeah, it's interesting stats, that's for sure.
So, yep. Trump's out there driving the economists crazy. That's headline news. Biden's slamming him, saying he's a scumbag, but nothing new there.
The dude was out this weekend. I don't know if you watched any of his speeches, but he's out there.
I got better things to do with my time than watch the dude.
Literally calling Donald Trump Hitler and people that support him Nazis. It's just the division in this country is just unsustainable. Like you said, buckle up later this year because it's gonna. I mean, this is his opening, calling the opposing party Hitler, while his people are literally taking the leading candidate of the opposing party off of the ballots. Like, just the projection from these people is just mind-boggling to me, man.
Yep. But we got a guy on Instagram of all places. Usually Instagram's a pretty good source. It's YU milligram, U milligram or something. He said, "You're just yapping, bro. Just admit it." Okay. I'm just yapping. There we go. Truce out. I know it hurts, but I'm just yapping. My lips are a flapping. Don't even know what the hell I'm talking about. Just reading off the news, which means I don't know what I'm talking about even more because I'm reading fake news. So he's probably right. Yeah, we're just yapping, right, Stephen?
Yeah, maybe.
Let's see. I'm just reading some of these comments. Truth is going to need a new definition in the Webster's dictionary. Very true. Number one order: never leave your post without being properly relieved. Yeah, that's a military saying there, right? Let's see. Because he has the 14 traits of fascism. Biden can't finish a sentence. We always get, usually, here's the funny thing. We had 82 people on YouTube and Facebook, another 40 on TikTok. Normally TikTok's like thousands, but because I got shut down so many times, and, a couple over here on Instagram, so our viewership's gone down, and it's probably because we're not talking about politics, Stephen. And it's kind of crazy to think about that, but because we've kind of steered away from the political talk, our viewership has gone down tremendously on this show. So as we get deeper into 2024, as this whole thing starts to show its ugly face, we will make sure that we cover a little bit of the politics just to get the haters back, because I miss them. I really do. I miss the haters. I definitely can't argue with
the green light on that. I'll be ready.
Yeah. So just so you know, I'll paint the picture of 2024 for this show. We will be covering the political campaigns and what's going on there, because it's going to be a wild ride. I'd be remiss not to say that that's going to be something fun to talk about. And we're going to have a lot of haters. Yeah, the haters are exhausting, Mary said. But you know what? We just lean into the haters, because you can just let hate bounce off you. It's pretty easy, and eventually those haters become, they start to like you because they hate you so much, but then they can't find any more reason to hate you. Then they start to like you. So haters need hugs too. We'll bring those shirts and hats back out. But,
quick update on mortgages just real fast, Chris. So mortgage demand jumps nearly 10% to start the year, even as interest rates tick up again. So the average contract interest rate for a 30-year fixed with conforming balances increased to 6.81% from 6.7%. 6.76% for loans with a 20% down payment. So we're sitting just below 7% at 6.81 right now. Applications to refinance a home jumped 19% from the previous week, and we're 30% higher than the same week 1 year ago. So, real estate continues to kind of hang in there, and a lot of pent up demand, I think, is trying to get out. And once that happens, what do you think is going to happen? We're at the beginning of 2024 right now. Any predictions on, what rates look like over the coming year? I see that Goldman Sachs says mortgage rates will stay above 6% through 2025. So that's Goldman Sachs. But what do you see happening, Chris? Any guesses?
I see them holding rates longer. I actually, it's going to be hard to say, see what inflation numbers come in at. Today I believe they report. Get a little bit more data into the new year, get rid of some of the fake fluff that comes at the end of the year because of the holidays. I mean, a lot of numbers are overinflated at the end of the year because a lot of companies will do what they can to boost their numbers, especially publicly traded companies. So now that we're in a new year, it's an election year, lots of turmoil going on worldwide. I think you're going to start seeing some of the misappropriation of funds start showing its ugly face. Some of the Ponzi's are starting to show their ugly face. You're starting to hear about all this stuff because during a bull market, during a boom cycle, you always see that everything just looks good, but there's a lot of stuff going on behind the surface that doesn't show itself until you start hitting harder times. And I think that's what we're going to see for anyone that thinks that 2024 is going to be a blockbuster year and just going to be a year to crush it in the stock market. I think you're going to be really upset. And I think a lot of people in real estate are going to make a lot of money, but I think a lot of people that are buying real estate heavily right now, thinking the price of real estate is going to continue to go up because of the demand. I think with interest rates being held higher longer, with some of the other things happening, I think you're going to be caught holding the bag. I think the price of real estate is going to go down more in certain parts of the country than others, but I certainly don't see real estate prices going up much longer. They might stabilize for a little bit, but I think that's what you can expect this year. I mean, I mean, I think we're going to start seeing us get closer and closer to a recession, but it won't be more toward the end of the year. I think that's when you're going to start seeing it.
Yeah. Just a quick update on the national debt. We just broke 34 trillion.
Woo! Yes.
About
Dude's crushing
23 billion over the last week. So things continue to roll up.
It's like with the U.S. debt, we can't sit there and say it's any one president's fault. It's not the dude's fault. It's not, Trump's fault. It's all their faults. Like, that's the truth. Like, they all played into this. Like, the debt is just out of control, but the debt has a lot to do, not just with the U.S. government, but it has a lot to do just with misappropriation of funds for a long period of time and trying to play God with the economy and not just letting it ride out. I mean, we have literally been playing with this thing for altogether too long, but really, if you point your finger at anything, since the early 2000s when the dot-com crashed, and definitely since the Great Recession, they've been toying around with, this printing press and the modern monetary theory of economics, which I don't know, it's too new to tell you how it's going to do, but it's certainly, if you study Austrian economics, that would have just let the market go, and it's healthy. Here's my prediction, and no one's going to like this, but I think we need a heavy recession. I think we need to clean the system out. I think you need a crash. It's going to hurt. But, it's kind of like a Band-Aid, like just tear it off. Don't tear it off slow, just rip it off. It's going to hurt for a little bit, but then things are going to be better. That's what we need. And again, I'll go back to the truth hurts. That's the truth. If you keep letting the Fed, try to manipulate all this, all you're doing is blowing the bubble up bigger and bigger so that when it does actually let loose, which it has to, okay, it's going to be worse and worse the longer it takes. So tear the Band-Aid off is what I say.
I like it, man. I like it.
Yeah. So, folks, join us this afternoon at 1 p.m. Eastern. We've got an old pro football player, NFL player coming on, played for the Giants and a couple other teams. And he's got a really interesting story of what life was like after the NFL, how he, what he did with all his millions that he made and what he's doing today. But we're going to tie it all into infinite banking. Why? Because this NFL player is one of the biggest infinite banking fans there is. He wants it. He wants lots of it. He wants it on his kids. He wants his family to do it. And he wants the world to know about it because he saw what it was. And he's just like, oh my God, this plus what I'm doing is just a powerhouse. So we're going to be talking a little bit about his journey, in the NFL, what happened after the NFL, some unforeseen things that happened in his life that literally landed him in jail, and what that all did for him and how he learned, or didn't even learn, but how he handled his life after that. It's a wild story. You should all join us at 1 p.m. Eastern to hear that story and learn a little bit about how you can take back the banking functions in your life. If you want to register, go to chrisnaugle.com and just register. It's free, and we'll give you my books just for registering. So with that being said, Stephen, thanks for joining me for the second. Yes, you're right, Tess Arthur, for the second What the F happened. We will see all of you this afternoon at 1 o'clock.